The trap is set, and once I show you Wall Street's latest crazy Bitcoin target, you'll understand why it's more important than ever to not get shaken out here. I know y'all are thinking the same thing. What the heck is going on? First, Bitcoin and altcoins rip higher, and now it feels like everything is crashing. If you think this kind of volatility is scaring off the big money, think again. Wall Street is now calling for a $350,000 Bitcoin target.
And I do think that in iShot, you're looking at 250, 350,000 pretty easily for crypto. There's a couple of things, a couple of hurdles, but I think those days of it losing 80% of its value and then rallying up are long gone. There's too many people that are looking for the asset.
That's right, $350,000 for Bitcoin. The most serious names in finance are making their move right now. Today, I'll break down what's really happening under the hood, why the price action looks wild, why institutions keep buying, and the big event on July 22nd that could change the entire game. Without further ado, ladies and gentlemen, let's get into it. If you're excited for this, do me a favor, you guys know what to do. Hit that like button, it would mean the world to me. Wall Street is moving billions, shattering records left and right. BlackRock's spot Bitcoin ETF just became the most profitable ETF in the company's history, now managing over $84 billion in assets since launch. When the world's largest asset manager puts that kind of capital behind Bitcoin, every investor feels the gravity shift. That momentum is spreading across the industry. Now check this out, Vanguard, the second largest asset manager globally, and the same firm that publicly refused to list the Bitcoin ETFs, has now become the single largest holder of Michael Saylor's strategy stock, holding roughly $9 billion worth, which adds up to approximately 8% of Strategy's entire market cap. As the saying goes, guys, don't listen to what people say, watch what they do. Vanguard's move makes it clear. Traditional finance is getting involved, and even the most conservative players are finding their way into our beloved crypto markets. This pressure is changing the landscape for every major crypto company. Just look at Coinbase. America's top crypto exchange just crossed $100 billion market cap milestone for the first time ever, closing at $394 a share. That's up 50% in the last month alone. That run came as Bitcoin broke $122,000 and set new all-time highs. And this just reinforced Coinbase's new status as a first pure play crypto company included in the S&P 500. Crypto now commands a seat at the head of the table, and the market is giving it full recognition alongside the world's financial giants. $100 billion. Guys, when I invested in Coinbase like 7-8 years ago, I had no idea. I mean, I was hoping. I had no idea it would go to these kind of prices though. And analyst targets for Bitcoin continue to climb. TD Cowen just raised Strategy's price target to $680 per share, with Bitcoin at $155,000 by December. Meanwhile, Bernstein sees this institutional bull market stretching into 2026, something we've been talking about for a while here on the channel, with a $200,000 target for Bitcoin. This confidence in our markets goes well beyond just Wall Street speculation. How do we know this? Simple. You can see the moves all taking place right on the blockchain. Strategy, for example, just added 4,225 more Bitcoin, spending $472.5 million and pushing their treasury to 601,550 Bitcoin. And remember, it's not just Strategy now soaking up all the Bitcoin. New publicly traded companies across the globe are replicating this strategy. And when you add it all up, the math just ain't mathing anymore. Soon, it will be Bitcoin sending me this meme instead of my team.
So we don't have the capacity.
Institutions are stacking real positions. Every piece of the puzzle points in the same direction. Hard assets, digital scarcity, and a market acknowledging Bitcoin as the most important asset they need to get ahead. The Wall Street stampede shows the game is changing. And if you've been sticking with me, guys, then you'll know that we got to front run them all. Feels good, man, doesn't it? Feels real good. This is why we dig in so deep and we look ahead. Have we been doing a good job at calling things that have been happening? Yes. It feels good to say that, but we have. We've been doing an amazing job calling Bitcoin price, calling the M2 money supply ahead as a leading indicator, calling the ETH rotation. Everything's been going according to plan exactly, guys. But when you zoom out for the headline and you look at your portfolio today, you might be asking, what the heck is going on with the market? Why is it going down? I know some of you guys are thinking, yeah, but Kyle, you just said yesterday things were looking mega bullish. What's going on? Bitcoin's at 116 now. Why aren't we at 130? Let's just take a breath here, guys. Remember, the real story isn't what happens in a day or even a week. The real winners keep their focus on the bigger cycles that drive the market. When you do that, you realize it's the macro direction that's the most important thing to focus on. And right now, that's still looking very good for us. When Bitcoin blasts through an all-time high like it just did, that's a win for the whole market. But it doesn't mean price will keep soaring up without pullbacks, aka, as we call them, bullbacks. Pullbacks in bull markets. Every rally, even the wildest bull runs, brings sharp dips and plenty of volatility. In fact, after a move like this, it's actually healthy to see some profit taking. The market shakes out late longs, lets whales take some profit off the top, and punishes anyone chasing the pump. We saw a classic spike in exchange net flows as soon as Bitcoin hit $123,000, signaling profit taking by both long-term holders and short-term traders. And on top of that, a huge whale from 2011 just moved nearly 19,000 Bitcoin worth over $2 billion to Galaxy Digital. When these old coins start making moves, the market pays attention, and even a hint at big selling can spook traders. This is just the perfect convergence of a little bit of a pullback. But outside of the charts, this week's headlines are only adding to the nerves. President Trump is threatening 100% secondary tariffs on Russian export buyers unless a Ukraine peace deal is reached in the next 50 days. I would love for this war in Ukraine to be over. Please, can we just end it? I miss Ukraine. I love it. It's a beautiful place to go to. I get my stem cells there. The food is incredible. It's an amazing country, and I would love to be able to go back. The last 2 times I've been to Ukraine, I've had to go to Poland first and then get into a car, drive across the border. It's like a 15-hour car ride or 17-hour train ride. And you are, after all, going into a war zone. I did it because I got stem cells, but I would love to be able to fly back into it. Anyway, sorry, I got sidetracked. And even if Trump's previous threats fizzled away, every new tariff headline has a potential to trigger risk-off moments where investors seek safety. And to top it off, today's CPI report has traders on edge. Before the numbers dropped, many took profits or hedged just in case inflation surprised to the upside. That's just classic market behavior. When a big event is on the calendar, the safe play for many is to lock in gains and wait for the dust to settle. But now today's inflation numbers just dropped, and they're sending mixed signals. For June, the US Consumer Price Index, or the CPI, came in at 2.7% year over year, higher than the expectations at 2.6%. That means prices are rising a bit faster than the experts were hoping for. But if we look at core inflation, which leaves out food and energy, that number came in at 2.9% for the year. This is slightly below the forecast of 3%, but it's still edging up from last month's 2.8%. This is the number the Fed is most concerned about. When inflation runs higher than forecasts, it puts pressure on the Federal Reserve to keep interest rates steady. Rate cuts usually come when inflation is slowing down. But remember, these numbers are backwards looking. To get a better idea of what inflation is doing right now, let's take a look at Trueflation. If you guys are fans of the channel, you know that we use Trueflation often to give us a real sense because we can never trust the government. And as you guys can see, real-time inflation is sitting at 1.82%, well below the Fed's 2% target. Markets react to this stuff right away. Investors watch inflation prints like a hawk because it shapes what happens with stocks, bonds, and yes, crypto. Hotter numbers mean the rate cuts could get pushed further out, and that keeps everyone guessing. And that's exactly what the market hates, uncertainty. The story behind today's CPI print is unclear at the moment. Prices are still climbing, but core CPI, which is the metric the Fed cares about the most, is trending in the right direction. So it's anyone's guess what the Fed does next. So if you're looking for a single reason for Bitcoin's dip, it's a mix of healthy profit taking, some whale movement, global headline nerves, and traders de-risking around big economic news. Every cycle, every new high, this pattern repeats. A quick dip never ends the trend. It just resets the playing field before the next move. Guys, I'll tell you just real quick a little funny story about myself. For the longest time, I've been in crypto since 2012. I've had Bitcoin since then. And I had such high conviction that it would be so useful one day that I wasn't even paying attention to market cycles and macro trends and stuff like I am today. I mean, the only reason that I'm so knowledgeable about this stuff today is because of this YouTube channel, because we've been doing it for so long, researching and then learning as I go along. But in the early days, up until about 5 years ago, I never even paid attention to cycles. I was just holding, and it didn't really matter if Bitcoin is up or down because the long-term trend was always up. But I'll tell you, it's been super interesting for me to make these videos, to learn about macro events. And now I really, truly feel like I've got my finger on the pulse and have a crystal ball to see in the future. And that's why I'm so excited to make these videos. In the comments, I always see, Kyle, you're a permabull. Wow, this guy's jacked on energy. Like, I know. But if you know the kind of things that I know and you've been around for this long, it's hard not to be super, super bullish, especially right now. I mean, for the past 3 years, last year was good, right? But it was slow and we had like 7 months of sideways movement. It was just boring. And the kind of patience this market teaches you before you get to reap that sweet reward that only most people who have been willing to stick it out through the rough times get to truly experience. Because the fact is that most retail traders will come running back once the Bitcoin prices and altcoins are already skyrocketing. Then they'll come FOMOing in and then they'll buy the top and they'll get wrecked. But you guys who are here early, pat yourself on the back because we haven't even got into that crazy period yet. But you guys should be properly positioned to take full advantage of what's coming next. And that's why you have to zoom out and focus on the bigger picture, because beneath all the noise, there's a much deeper story playing out in the global financial system. And it's reshaping everything fast. Liquidity in global bond markets just hit its worst level ever. The Bloomberg Government Bond Liquidity Index is now at a record high, which actually means it's harder than ever to buy and sell government bonds. The index has just doubled in just a few months because of all this new government spending in the US and Japan. This kind of squeeze hasn't been seen since the 2008 financial crisis, and it's making investors everywhere very nervous. When bonds get this hard to trade, it's a big warning sign for the entire financial system. Rising yields in major economies confirm this. Japan's 30-year bond yield climbed to 3.17%, a historic high. Investors tracking long-term rates see this move as a warning. Governments carrying massive debt now face shrinking options and rising costs. Fiscal policy is making matters worse. In the United States, deficits expand with every passing quarter. Young workers and the middle class are hit the hardest, with Lynn Alden explaining that these are the toughest environments imaginable for those trying to buy homes and raise families. Now, for me right now, it doesn't even make sense to buy a home, right? And the only time that I think it does is when you're financially set up and you can afford to buy a home that you're going to live in for the long term, if that's what you plan on doing. For me, I moved back to America, as you guys know, and I'm leasing my house. I can buy one, sure. But do I want to pull my money out of the market right now and put it in real estate? Absolutely not. In fact, I'm trying to sell my villa in Thailand right now. If anyone wants to buy it, go ahead. But I'd love to put that money back in the market, right? And it's not until I get to ride this exponential wave of the crypto market, at least for this cycle, and maybe even for the next one, before I feel comfortable taking some of that money, because I think there's maybe less potential upside in the future, and putting it in something like real estate. But the point still is, though, for the majority of people who are looking to buy homes right now, it is just unattainable. And economic growth at the top isn't translating to opportunity for the rest, which explains why the middle class has essentially been wiped out. Which is also why I'm very excited to educate you guys on crypto and the potential it has to opt out into what historically has been set aside and suggested by traditional investment advisors. You know, when I was a kid and I started making money and saving, I had my first job, my parents suggested that I put my money in mutual funds, which does something like 3% a year. God forbid you put it in the bank, which just loses money due to debasement of the dollar. But even mutual funds can't even keep up with inflation and debasing of the dollar either today. So the youth of today, and you guys watching this, need to figure out other strategies other than what the TradFi markets are saying. Now, they're catching on. Thank God they're catching on, right? And we'll talk a little bit more about your options in just a second, but something has to change, and this is how it changes. And meanwhile, over in China, they posted a $586 billion trade surplus in the first half of 2025, with exports up over 5.8% year over year to $1.8 trillion. Imports, after months of stagnation, finally gained 1.1%. Shipments to Southeast Asian countries surged 17%. China was quick to adapt to Trump's trade wars. They realized they'd come under pressure and found alternative trading partners to fill the gap. Now, it wasn't like China actually saw this coming to some degree, or at least wanted to not be so reliant on America as a trade partner. You know, just 3 months ago, I was still living in Thailand. And one of the things that I found so fascinating was Thailand and China signed a 5-year trade deal where there would be zero tariffs on Chinese imports into Thailand, which was remarkable for a lot of things. I took advantage of that. I bought stuff on Alibaba. I bought like a buggy, 4-wheel drive buggy, cars. BYD and other car manufacturers were exporting tons and tons of vehicles into Thailand. And that's amazing because Thailand doesn't make very good quality cars, but China does. And so China was exporting all kinds of cars. It was just really interesting to see that zero tariffs on Chinese imports, and China manufactures so much stuff, and they're getting into even higher quality manufacturing. I don't know if you guys, if you're into cars at all, check out some of the cars that are being developed right now in China. I mean, they're competing straight for Rolls-Royce quality cars right now for like, I saw something the other day, it was like Rolls-Royce quality for $100,000. A Rolls-Royce starts at like $550,000. So it's pretty amazing to see what's happening over there. So when you follow all of these signals, liquidity is drying up, yields moving to historic highs, deficits are multiplying, and trade alliances are shifting. You'll start to see that the world's financial engine is moving into unknown territories. Capital, jobs, and security all ride on these shifts. From Wall Street to Main Street, everyone is feeling the consequences of global trade uncertainty. As these macro waves build and the old safety nets fall apart, capital doesn't wait for the alarm bells to sound. Remember, markets are forward-looking. So if you want to stay ahead, all you have to do is watch how and where money is moving. But that's why you guys are here. Money's already finding a new lane, and every sign says Web3 is about to go mainstream very fast, and DeFi is leading the way. Aave's net deposits have reached a staggering $50.67 billion. Think about that number for a second. On-chain lending has grown so large, it's now operating on the same scale as the big traditional banks. Mind-blowing. I love Aave, if you guys don't know. Decentralized platforms keep getting bigger. Each new milestone pulls in more attention, users, and liquidity. And that rising trust and volume are quietly powering the rest of the market. Numbers don't lie, so let's check the scoreboard. The altcoin market just broke its multi-month downtrend. Oh, come on, alt season, let's go. And the recent rejection at $425 billion showed a much smaller dip than past cycles. The market's shifting so fast that old price ceilings don't hold on like they used to, and fresh money keeps finding new ways to break in. Each breakout sets off a chain reaction. When new flows enter, a new generation of traders and projects step in, bringing fresh energy and innovation. The patterns keep repeating. Each time Bitcoin hits a major breakout, whether it's $30,000 to $44,000, or whether it was at $45,000, $71,000, or $71,000 to $105,000, altcoins respond with face-melting, weeks-long rallies. Money keeps rotating between Bitcoin and altcoins, giving active investors good entries and keeping the whole crypto market moving. Institutional adoption has only accelerated this trend. Solana now secures over $418 million in real-world assets. This is a 140% jump since the start of the year. Lending and credit activity keeps on rising. On Coinbase, Bitcoin-backed loans just topped $1 billion in collateral. Crypto holders keep finding new ways to put their coins to work, earning from the market's growth and tapping into the latest trends at the same time. Everyone is jumping on the crypto bandwagon, from sovereign wealth funds to public companies. Even Kazakhstan's central bank, Metaplanet, and Bitmine, they're among them. And they're building substantial crypto treasuries and expanding their exposure to both Bitcoin and Ethereum. Metaplanet just picked up an additional 797 Bitcoin, almost $94 million worth. ProCap now holds 4,950 Bitcoin valued at $601 million. These positions are squeezing supply and showing that conviction is alive at every level. These strategies are laying the groundwork for serious long-term growth, locking up supply and making crypto's foundation even stronger. Every big move starts with Bitcoin. It's setting the early tempo, pulling in record-breaking capital. But lately, you can feel the spotlight shifting. Ethereum and top altcoins are starting to get more attention. Before I get into this next section, check this out. I thought this was very, very fascinating. So let's check out yesterday's ETF flows. So as you guys can see on Bitcoin yesterday, there was about $297 million into Bitcoin's ETFs, and even some profit taking from ARK Invest and Fidelity. But what's the most fascinating I saw is, check this out. Ethereum had zero outflows from any of the big issuers, but they had $260 million in inflows, almost as much as Bitcoin. And again, with a 7 times smaller market cap, this moves the needle much more. Let me show you something else. At the time of recording, in the 24-hour period, you got Bitcoin down 2% and Ethereum up 1.1%. I don't know, guys, call me crazy, but to me, it feels like we're in the very early stages of altcoin season. And you have Bitcoin outperforming on the 7-day and the 30-day of Bitcoin, right? You have Ethereum outperforming. So it's too early to call right now, but let me know in the comments, guys, if you would like us to start talking a little bit more about where we can position and where we think the altcoins will run the hardest as soon as we get a bona fide altcoin season, which it looks like it's starting to do that. For me, it's just a little bit too soon to call, but I think we're just about there. Speaking about altcoins, just look at Sui. This altcoin has been absolutely on fire, and you guys know we talk about it all the time. Yesterday, when everything was hot and the whole market was pumping, Sui took off. It was one of the top gainers, outshining almost every other L1 out there. And even today, while pretty much everything was in the red, Sui held up stronger than the rest. And it's not just the price action that's impressive. Over the last month, the number of wallets on Sui jumped by more than 10%. There are now over 230 million wallets on this chain. That's crazy. Daily active users are up 145%. And quickly, guys, if you take a look at this right now, like how much room does Sui still have to go in this bull market? Well, I don't know. I'm not going to give you an exact number, but what I can tell you is that to me, it feels like Sui is getting ready to explode. And I feel like we're going to have Sui season in this bull run. Again, I've said this before, but I think Sui will actually be the Solana of this cycle. That's my opinion. And you can see it's just been crushing, a 39% over the past 7 days alone. But I think what's really interesting here is that the current market cap is about 13.86 billion. If you look at Solana, Solana is about 7 times more expensive than Sui. Now, with good reason, right? It's with good reason. I mean, Solana is bigger, there's more liquidity, there's more action going on over there, sure. And Solana has a lot less to prove than Sui does. But if you're looking for asymmetric bets here, I think Sui is a pretty good call. Not financial advice, of course, but that's just kind of how I'm looking at it. Sui shot up to become a top 5 chain by 24-hour DEX volume, sitting in the same league as Solana and Ethereum. See what I mean here? Plus, total value locked just past $2 billion. That's a level that grabs the attention of both DeFi degens and the big institutions. And Grayscale just put out a big research report on Sui. And remember, Grayscale built the world's largest crypto funds. So when they're diving deep on a project and giving it the green light, you know TradFi is watching. And keep in mind, SUI is also on the list of pending altcoin ETFs. That means if we see another wave of ETF approvals, SUI could be the next in line for that big Wall Street spotlight. When that happens, you already know the type of inflows that can happen. And one more thing too is the way I'm looking at this, when Wall Street goes and does research on these different ETFs, Solana, SUI, and I think Solana speaks for itself, but when they're looking at the other opportunities, SUI, for example, coming out of Mark Zuckerberg's camp, out of Meta, out of DN, it just makes sense that they're going to say, wow, this is essentially a Zuckerberg production. I mean, SUI, if you're watching this, please don't be insulted by that, but it was born in Zuckerberg's camp. And a lot of the research and development that was already done to make this blockchain was done while still under the Meta umbrella. And now they're independent, Aptos and SUI, but I think SUI is doing a much better job marketing, and that's what it takes to get ahead in this industry is tech, or as Ivan would say, pumpamentals plus fundamentals. Also, SUI's developer scene is heating up too. In the past year, the number of active devs building on SUI is up 16%. And over the last 2 years, it's 54%. Nearly every other major L1 is flat or shrinking. There's a saying in crypto, follow the devs and the money will follow, meaning that the smartest capital always chases real innovation and the teams building for the long haul. When you see developers pouring into new ecosystems and protocols, you can bet the big money isn't far behind. That's how entire cycles are built. Talent shows up first, then liquidity, then headlines. Watching where builders go today often tells you where the biggest opportunities will be tomorrow. Now, I must be completely honest and give you a caveat here. There's also this mentality from the developer community and the founders of different super tech-heavy development things. Think Cardano, think Polkadot. Polkadot at one point in 2021, 2022 had the most active developer ecosystem. However, the team from Polkadot really believed in the adage, if you build it, they will come. They didn't have the pumpamentals. They didn't have the marketing. In fact, they were so afraid to market. They're one of the only L1s that never had any trouble with the SEC and Wells notices. But at what cost did it cost them? Essentially, it made them be so boring that everyone stopped caring about them, even though they had a super heavy developer ecosystem. So in this space, when we're looking at placing our bets, we have to look as, is the tech sound and is the team capable of getting attention? And guys, I'm thinking about doing a SUI ecosystem show soon. If you have a favorite SUI project, drop it in the comments and I might include it. I know a lot of you guys are waiting for those altcoin calls, and the moment is getting so close, I could taste it. So when the setups line up, you know we'll bring you deep dives on the top altcoins and new narratives like I always do. And speaking about calls, you know that we've been fairly conservative on this channel over the past 6 months or so, and for good reason. Bitcoin dominance has been climbing and climbing and climbing, so we talk about that, right? But we will bring you, and we have brought you, calls when they're warranted. And last week, we brought you a video on Bonk. If you follow that trade, you're up a lot, right? We covered Bonk at 1.7 billion, and now it's up to 2.4 billion or whatever. Check this out. Even with the volatility, we mentioned 130 million, went up to 5 billion, for example. Now it's sitting at just below 2 billion. What you can see over here in the last 7 days, essentially, is a token price went from multiple zeros 1.3 to multiple zeros 2.3, essentially. And so it did a 2x basically over the past, 87%, what is it? 75% over the past 2 weeks. Why? Because of this Bonk fund narrative. So we saw a clear opportunity to bring it to you. It made sense to bring it to you. The whole pump fund versus let's bonk narrative. And I still think Bonk has a lot of room to run. But anyway, I just wanted to show you guys there that when I feel it's warranted, I will bring you these altcoin picks. Let me know in the comments below if I'm missing anything solid. Please let it be solid. Please don't spam the comments with a bunch of crap. We already have enough bots doing that, which we're trying to get rid of, but YouTube does a horrible job at bots. Right now, all this momentum is building toward a single moment. The whole industry is holding its breath for what happens when the next wave of rules and regulation finally drop. The countdown is on and everyone's watching. Before we get into the big event that takes place on July 22nd, just a quick word from today's channel sponsors. Thank you, BloFin, for sponsoring the channel. Without you guys, I'd probably have to bring on some crap coins. And so I'm really thankful that we do have these super high quality channel sponsors. So first up is BloFin, guys, a no KYC exchange open to Americans super low fees, every trading pair you could ever dream of, all in one place. And they're having a trading competition now up to $4.2 million in rewards, and even can win a Cybertruck. Deposit and receive up to 20% cash back on your trading fees. And if you sign up with my link, send proof, and you'll get access to my private Telegram group. Altcoin season is coming, guys, and I'll be sharing my best calls in there before they ever hit YouTube. Just click my affiliate link in the description below. And guys, earlier I spoke a little bit about Bitcoin and retirement, right? And money being debased. But did you know that you could hold Bitcoin in your IRA and watch it grow tax-free? Bitcoin IRA is America's first and most trusted crypto retirement platform, used by over 200,000 people. It's fully regulated with secure, insured custody and 24/7 support. You guys can roll over your existing 401k or IRA in just a few clicks and get all the upside of Bitcoin and altcoins without the tax headaches. If you want your retirement to work harder for you, Bitcoin IRA is the move. Click the link in the description below, guys, and tell them Kyle sent you, and they'll take care of everything. And if you guys don't have a retirement account, let your parents know, let your grandparents know, let your sibling know. This is awesome. All right, guys, now back to the show. Beyond Crypto Week, which we broke down in yesterday's show, I'll leave a link to it at the end of this video. If you haven't seen it, go check it out. It's an awesome video. The next big date on everyone's calendar now is July 22nd. That's when the Treasury, the SEC, the CFTC, and every other top US agencies drop their new digital asset report. This could be a real turning point for the whole industry. Caitlin Long, the founder of one of America's first crypto banks, says this single report could actually reshape the rules for Bitcoin, Ethereum, and pretty much every asset on chain. Quick refresher, guys. The Treasury sets the federal financial policy. The SEC is in charge of stocks and investment markets. The CFTC handles futures, commodities, and digital asset derivatives. And lately, we're seeing more clarity than ever. The Federal Reserve, the FDIC, that's the Banking Insurance Agency, and the OCC, the Office of the Currency and Comptroller, the main bank regulator, just made it official. US banks can now custody crypto for their clients. This is a major door opener for traditional finance. And with demand from both retail and Wall Street, we could see billions in new inflows unlocked. Of course, if you're technically savvy enough, and even if you're not, I suggest that you learn how to do it. Of course, for me, the goal is self-custody, right? The goal is self-custody, but I do understand that there's a lot of people out there that don't feel comfortable doing self-custody. And so I can see the banks being very valuable for them. For me, I hate using banks, right? I try to use them as little as absolute possible. But I think overall, this is bullish for the industry. Of course, not your keys, not your crypto, right? So if you're into sometimes wearing a tinfoil hat like me, and you think that one day potentially things can get wild, and that's not even that crazy. They have before, right? At one point in time, America confiscated everyone's gold. What's to stop them from confiscating Bitcoin in the future? If you hold it in your own custody, they can't do that. But if it's in the bank, it'll be done for you. Trust me. But anyway, I do think that's bullish anyway for the industry, because there's some people that just don't feel comfortable self-custodying, and they've been used to a bank holding their assets their entire life. And so for them, this product will fit. And the bottom line is that it's bullish for Bitcoin, bullish for crypto, because it'll help more people on board, put more buy pressure into our markets, more money into our markets, and this gives the banks something else to generate revenue, and so they'll be pushing it to their clients as well. And on the corporate side, things are heating up too. Grayscale just filed confidentially for a potential IPO, joining Circle and eToro and getting ready for the next big wave of digital asset growth in public markets. Everything right now is building toward July 22nd. Policy, custody, capital access, it all converges on that date. Institutions, market makers, and everyday investors are watching closely for the new rules, because as soon as they drop, everything changes. Bitcoin still calls the shots in this market right now. If you combine Bitcoin, Ethereum, USDT, and USDC, their market share is near 82%. That's where the bulk of capital is parking itself. So if you're trying to navigate crypto, Bitcoin is always your compass. Every breakout brings fresh opportunity, and you can see it in the numbers. Since July 9, spot volumes for Bitcoin jumped 50%, with futures up nearly 32%. Even with all that action, those volumes are still running below this year's average, down about 23% for spot and 22% for futures. This tells you that the rally's building up steam, but most people haven't piled back in yet. When you see those volumes start to spike, you know momentum's coming. When things cool off, you know it's time to prepare for the next setup. Let's take a step back and look at what we've just witnessed together. We kick things off with a bold $350,000 Bitcoin call in CNBC, a shot heard around the financial world. From BlackRock's ETF breaking records to institutions and public companies stacking sats at scale, to the July 22nd countdown that has every serious investor glued to the screen. This market is rewriting the rules in real time. If you're feeling those pullbacks or seeing wild swings, remember, this is all part of the process. Every major run brings shakeouts and volatility. What separates the winners from the losers is conviction, the ability to keep your eye on the bigger picture while others are distracted by noise. We're still in the early innings of something massive. Stay tuned, guys, because Congress is about to drop some major updates that could shake up the entire market. If you want to know exactly what's coming and how these new developments could impact your portfolio, go watch yesterday's show. I break down everything that you need to know about Crypto Week and how to position ahead of what's coming. Have an amazing rest of your day, guys. Don't worry about the small little correction. It's all part of the plan. Remember, guys, stay sharp, keep stacking your sats, and I'll catch you on the next one. See ya.